Hello, it's Adil Fazal bringing you a review of the US markets on behalf of CFDs.com, market analyst, a leading spread betting and CFD brokerage. If you'd like to know more about the services and free products, just visit CFDs.com. Okay, folks. Right, so let's get started in terms of the approach that or the situation or the current juncture with regards to US markets prior to obviously non-farm payrolls, obviously the impact that will have on the dollar, on the bond markets, especially the bond markets, given the actual fluctuations and the wild moves in the yields this week. Okay, so especially with regards to EUR Bonds. Okay, so the situation first of all with regards to the actual markets overnight. You had the US markets obviously under pressure, and we've had the Asian markets under pressure to a certain extent. We've had the Nikkei obviously negative, Shanghai pretty impressive again, certainly seems to outshine the rest. Hang Seng negative. Okay, so the negative bias came from the situation with regards to Greece and the interpretation of the fact that they are going to be missing, well, not missing, but not making a payment, which has been sanctioned by the IMF. And that's been considered in a negative, obviously, light going into the weekend and the uncertainty that arises from that. And that obviously has caused the markets to certainly come under pressure. Now, commodities have obviously been hit as well to a large extent, with oil prices dropping as low as 57. If I just bring up a chart of oil and certainly show you and demonstrate the actual price action in oil, as you can see here, we've gone as low as $57. Now, obviously, we've got the OPEC meeting, so that certainly is having its ramifications with regards to that. Now, we have had a rise in the dollar as well. So if you look at the actual chart of the US dollar, if I just bring that up, and dollar itself is into support, so obviously that's hurting commodities. I'll just share the chart of the US dollar. Here we go. Okay, so this is a dollar chart. I'll just bring up a daily chart here of the dollar itself, and we are coming into previous resistance equals support. Okay, bear with me. Bring this up again. Here we go. Okay, so previous resistance equals support. Obviously, we've had a bounce given the fact that we had unit labor costs and the jobs data coming in line yesterday, and that obviously gave the impetus for the bounce with regards to the US dollar. Now we have an inverted head and shoulders formation in the US dollar. So when we have an inverted head and shoulders formation, we're now waiting for a fundamental catalyst, and the fundamental catalyst, as we all know, is the actual NFP that's coming out. So you have this inverted head and shoulders. You have an unfilled gap above. Okay, so even though we did take a hit from the IMF statement yesterday with regards to them stating that the US markets needs to obviously push back or pare back their interest rate rise expectations, and the Fed should certainly hold back because it hurts emerging markets and so on and so forth. Yes, we did have a slight blip in the dollar, but now obviously the market is certainly starting to tick up. Okay, so we are looking for an inverted head and shoulders formation to going into NFP. Obviously, the NFP is a wild card, whichever way the market goes. Obviously, we'll have to react and adjust accordingly. But the way in which this market is set up right now, we have an unfilled gap above on the dollar, and that certainly needs to be closed. And the NFP certainly seems to be the only catalyst that will provide that. Okay. Also, given the fact that the actual bond market in the in Europe, so if I just bring up the EUR Bonds and give you a demonstration. Here we go. Euro bonds obviously have put in a potential pivot low. Okay, so that obviously means the bond market goes higher, yields go lower, and the Euro USD goes lower, and that means that the dollar obviously has to rise in order for Euro USD to push lower. Okay, so given the fact that we had a nice uptick in volume, today's volume is quite low and we're consolidating within that green candle. We did put in a potential bottoming tail or reversal type pattern. If I just go to a 60-minute chart on the Euro bonds and demonstrate and show you. Okie dokie, right, yes, so we've put in a lower low, a lower high, and we are now putting in a higher low. We've put in a bullish engulfing candle and now looking for a potential powerful reversal on the upside. If we do go higher on the Euro bonds, then you are looking at your potential. Obviously you've got resistance already there. You've got previous support equals resistance here. Okay, so these are all zones that we're going to be in. We did have a downward sloping channel here. Obviously we've broken out of that now, and this market certainly seems bullish from this current juncture. And obviously, as we all know, the European equities trade inverse to the actual Euro USD. If I bring up a chart of the Euro USD and demonstrate to you, if the Euro USD obviously is going down, as you can see here, we've broken out the bullish channel here. Okay, so given the fact that we've broken out the bullish channel on the 4-hour chart, if I just go to a 60-minute chart and demonstrate to you, If the Euro USD goes down, then we all know what the situation. What we all know what to expect thereafter, and what we're expecting thereafter. Obviously, is the fact that the actual European equity markets go higher. Okay, that's the situation. That's what we basically expect. So the Euro USD obviously is putting in a lower high. It certainly seems to be weak, given the fact that the bond market obviously has stabilized to a large extent post Draghi's volatile comment remark. Okay, or expecting volatility in the markets going forward. So this is how the market is interpreting it thus far. Okay, so now going to the we've obviously discussed the fundamentals now, because everything certainly seems to be yields, bonds, and obviously Greece. Okay, and that certainly seems to be the driver at this current moment. Given the fact that the IMF, this is the most important thing, the IMF has sanctioned the delay, it is fine. If the IMF did not sanction the delay, then obviously that would be considered negative and a risk-off type environment, or type event. And given the fact that they are obviously trying to come to some sort of reconciliation or some sort of agreement, again, that means that they are actually actively working towards it, so therefore it's bullish. Okay, now let's bring up the US market. So first of all, let's start with the Dow Transports, looking at the technical picture and see how the market set up prior to the actual NFP. Given the fact that the dollar itself has an inverted head and shoulders, and obviously is putting in is into support, and given the fact that economic data and the jobless numbers came out stronger, basically from my interpretation that's bullish. Now the Dow Transports is hitting previous support equals resistance, and it is in that zone, although having said that, it has put in a inside bar or consolidation candle, so that's considered bullish from my perspective. Okay, 60-minute chart of the actual Dow Transportation tells you that there is a inverted or a reversal pattern underway. As you can see here, the market's no longer making lower lows, lower highs. We obviously pushed higher, we made a higher low, and now we're looking to a thrust higher, potentially up to the 200 MA. So again, that would be considered bullish from my perspective. Now I'll bring up the chart of the Dow Jones now, rather opposed to the Dow Transports of Dow Jones. Okay, so again, if I just go to a daily chart first of all, which is going to be important. Okie dokie, right, so we have this H&S formation which has been triggered, which I totally understand, but given the fact that the Dow Transports has got an inside bar consolidation, that's the one that I will be focusing on for now. Okay, but again, we can't ignore the fact that this has a H&S, and it's certainly set up to be potentially bearish going into today's session. Okay, so again, everything is about Greece, and Greece will dictate. Now the 60-minute chart itself, obviously you can see we've had a very, very impressive flush. Okay, and we are coming into this potential support zone. Okay, so let's just sum this up for you. Get rid of these, get rid of this, get rid of this. Okay, so the next support zone on the actual Dow itself would be here. Okay, here and here. Okay, so again, these are all key support zones for the actual Dow itself. Now, given the fact that the economic data yesterday was pretty certainly impressive in terms of unit labour costs, etc., this H&S formation may well be vulnerable to obviously not breaking down. Okay, so it could certainly remain afloat, given the fact that, like I said, the IMF has only been delayed, not actually rejected. Also, we've had stronger German data out today, and also German forecasts were stronger as well, so therefore that supports the bullish argument. But again, one must respect that the Dow has a H&S formation, and the setup isn't as bullish as it is on the Dow Transports, but nevertheless, it's something that we take it as a whole. Okay, so again, we must be obviously aware of the downside risks posed on the Dow 30, okay, or the Dow Jones. Now let's have a look at other indices to see if we can obviously decide whether we should go with the bullish setup for the Dow Transports, or obviously the bearish setup on the Dow Jones. Okay, let's study the S&P now. Let's try and work out exactly where the S&P is and what situation that's in. Okay, so daily chart of the S&P 500. We'll work out from the daily chart first of all, always larger time frames. Okay, so again, you have the similar type pattern, H&S formation. We've broken below the neckline. One could argue that we are looking for a flush down to the 2085 level. We're already at 2094 already, to a large extent. So the daily chart certainly is screaming bearish. So again, that's something that we must respect. Okay, Let's have a look at the actual 60-minute chart now of the S&P 500. Now you have support here, and then you have support at 2085. So again, that's something that we're going to keep a very close eye on from my perspective in terms of going forward. See if we can just draw in a trend line here. Okay, that certainly seems to be the better one. No, that's not the one. Okay, so this is fine. So again, 2085, 2086, if this support level here fails to hold and the market obviously starts to reverse. Okay, so again, that certainly needs to be respected, but we must be aware that there is a H&S formation on the larger time frames, and again that must be respected. So 10-minute chart of the S&P 500 will certainly show and demonstrate that again we have put in a potential bottom here on the 10-minute chart. We've had a thrust in volume as well around the 2095. So 2095 certainly is support, and obviously you've got diagonal trendline support as well. Now the only thing that I would be aware of is that you have an unfilled gap above. So whenever the market leaves an unfilled gap behind, then it generally dictates that the market wants to push back towards it. It's just a price discovery mechanism type event. So we have a H&S formation, as you can see here. You have your left shoulder obviously here. Your head was the 2120 lead region. You're looking at the neckline around the 2110. So you're looking at 2100 if below, and obviously the H&S has been completed. So just purely from a technical basis, when a technical pattern is complete, then it generally triggers off a short squeeze, and you have broken out of this bearish channel here. Let me just demonstrate. As you can see here, we have a bearish channel. Okay, as you can see here, also you have this bearish channel. So you've got downward sloping wedge type pattern. Okay, so whenever you have a downward sloping wedge pattern, then that generally tends to indicate that the markets are looking to potentially break out. And given the fact, like I said, that the Greece news certainly seems to be misinterpreted to a large extent, okay, and we are looking for a thrust higher on the S&P 500, especially given the fact that the NFP is the way in which the currencies are set up. We are looking for a potential move higher. Okay, right, let's corroborate that. Let's see if we can verify that with the IWM and the IWN. Okay, so let's bring up the chart of the IWM, which is Russell, and see if we can confirm that. So bear with me 1 second. If I can find that now. Actually, you can look at the Wiltshire as well. This is an interesting one. Okay, so Wiltshire 5000, given the fact that it's a comprehensive overall obviously analysis of the markets, given the fact that it's almost 5000, it's a very broad array. Again, the Wiltshire certainly has the same type of pattern. Again, it has the H&S, which everybody must be fixated on at this very moment in time. Will that play out? We shall soon find out. Okay, again, the market is king. I'm not making any potential prophecy here. It's all about probabilities, and obviously putting a good money management, good risk management, and then putting your case forward in terms of your argumentation for bullish or bias. So again, you are into support, potential support here. Obviously, if that gives away, then you have support below, but we are into support on the actual Wiltshire. But bear in mind, it does have the H&S, which is obviously synonymous with the Dow and synonymous with the S&P 500 as well, which is a cause for concern. But at this very moment in time, one could argue that the overwhelming news flow isn't exactly bearish, especially with the Shanghai being bullish overnight. Okay, so I'm just still trying to find this Russell. Oh, here we go. Okay, so you've got the IWM. Okay, this is interesting. So daily chart, no real concerns here at all with regards to the daily chart. No, nothing overtly bearish. Okay, and now we have let's just have a look here. Okie dokie, let's have a look here. So the 60-minute chart at the moment, nothing really. I mean, other than the fact that you do have a potential bear flag scenario here that one must be aware of, and one could argue that you do have a H&S formation here too. So you're looking for a right shoulder, given the fact that you've got the left shoulder in, you've got the head in. Okay, so head's in as well, and then obviously that's triggering off this potential H&S down to the support level below. So again, that's going to be interesting. Okay, that's going to be very interesting. Okay, going forward, very interesting. Okay, that's the situation and scenario that we find there. So the IWN. Okay, so again, this is into this has a potential H&S formation too. The right shoulder obviously is holding to a large extent. Okay, if we go to a 60-minute chart now and see whether or not this will transpire. Okay, so the NFP looks like it's going to be a very important number. Again, you do have a 200 MA support, and there is an argument here for a potential bear flag scenario. So overall, the indexes, one could argue, looking towards the bearish side, but again, the bright spot remains the actual Shanghai. As you can see here, weekly and daily is certainly very impressive. Okay, let's sum up the NASDAQ now. Let's go to the NASDAQ and see the scenario and the situation there. Okay, so the NASDAQ chart itself, so the daily chart certainly seems to have broken out of its bullish channel, so that's certainly a cause for concern. 60-minute chart, let's just observe this 60-minute chart at this current juncture. Okay, 60-minute chart is obviously into gap fill support, so again that's bullish for the NASDAQ, and obviously 200 MA support as well. So that certainly is bullish for the NASDAQ and looking for a potential thrust higher. Okay, now let's corroborate that with the actual NASDAQ, biotechs and semiconductors. Biotechs are very impressive, broken out, looking for consolidation and looking for a further break higher. Okay, the semiconductors themselves, obviously we put a higher high, and now we're looking for a higher low and looking for another thrust higher. So again, the semicons and biotechs are very bullish. The NASDAQ itself, it has broken up that bull flag, but will it follow its peers? Now the biggest argument from my perspective is for the US markets to obviously thrust higher and push higher is the European markets. And this is something that I always have to work in concert and make sure everything is obviously aligned. Now the FTSE Europe, as you can see, gap fill support, holding support, so looks very bullish. The German DAX, for example, if you look at your daily chart, you'll see that it's actually into support. If you bring up the chart of the CAC, you'll see a very similar pattern there as well. It is also into support. So again, very important. So if I just bring up a chart of the French CAC here, okay, as you can see here, my system certainly seems to have frozen for now. Okay, so taking everything together, so again the German DAX, horizontal support, very unlikely for that to break, okay, or be negated. Okay, so again that's certainly something that we must remain open to as well. Okay, so that's certainly something that we have to pay respect to. Okay, so the European indices certainly seem to be coming into potential support. Also, if you bring up a chart, the French CAC, and also the FTSE 100. So if I bring up a daily chart of the FTSE 100, and you shall see with regards to the FTSE itself, looking at a daily chart, it is obviously into horizontal support and is certainly holding that. You have the 200 MA just below at 6750, so therefore I expect that to hold. Okay, then you also have the French CAC as well. If I bring up the French CAC, look at a daily chart of the French CAC. Okay, let's just have a look. Okay, so again, French CAC is into support. Given the fact that the markets are dictated to by Europe, and if European markets are into support, then one would presume and assume that obviously the actual US markets would then obviously subsequently bounce as well. Okay, so when we're assessing this market, even though we have a bearish setup on the US markets, there's no real bearish catalyst to propel that lower, other than the fact that we can use Greece as an argument. Okay, and given the fact that Greece obviously has asked for a delay, it certainly seems that they're working in cahoots with the ECB, and it certainly seems to be some sort of plan that devised. Then don't be surprised that the markets start to short squeeze higher, and then obviously negate the H&S formation. Okay, so that's the setup, folks. My interpretation thus far is that we will look to rally and continue the rally if the European markets hold that pivot low, which I expect to hold, and the dollar itself will play the rest of the role. Okay, folks, so I think that's a setup, and that's a wrap. So risk on, risk off, wax on, wax off. Adil Fazal, market analyst on behalf for CFDs.com or CFDS.com, signing off. Goodbye now.